Breaking news: China's hidden property debt could trigger a global market crash this week. First, investors thought China's real estate sector was cooling, but hidden liabilities are now surfacing. Analysts at Bloomberg estimate more than $2.5 trillion of off-balance sheet debt linked to developers. Then, Evergrande's bankruptcy filing in late March revealed that creditors are only seeing 30% of promised repayments. The shortfall has already forced banks in Hong Kong to tighten lending. But here's where it gets crazy: the Chinese government quietly lowered the reserve requirement ratio for state-owned banks by 0.5 percentage points on April 15. That move was meant to boost liquidity, yet it masks the true scale of the crisis. And that's not even the biggest part. In early May, the People's Bank of China announced a 20% rise in mortgage defaults in Tier 2 cities, a figure 3 times higher than the official national average. Meanwhile, global investors are feeling the pressure. The MSCI World Index slipped 1.2% on Tuesday after a major hedge fund disclosed exposure to Chinese property bonds worth $8 billion. The domino effect continues. European banks holding Chinese real estate assets have cut their price targets by an average of 15%, according to a report from Deutsche Bank on May 22. Finally, the hidden crisis could spill over to commodities. Copper prices, a key input for construction, fell 45 cents per pound after Shanghai steel mills announced production cuts, citing uncertainty over future projects. If this hidden debt wave turns into a cascade of defaults, we could see a synchronized sell-off across equities, bonds, and commodities within days. Stay alert, diversify, and consider safer havens until the full picture emerges. If you want to see what happens next, subscribe.